Actually can't hear me. All right. That's awesome. Ay, 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 ay. I need a producer in my life. Oh, me, oh, me, oh, me. Welcome, everybody, to the weekly trading show. I'm so glad you're here. I had wonderful things to share as we kicked it off, and I fumbled the ball. I thought we were being fancy with the countdown, and there was a cacophony of challenges that occurred all at once, including a power outage, which made it less than climatic. We'll say that. Hey, let's kick things off here. I'm really excited to tell you guys that the one, the only Alfonso Esposito is here with us today. I've asked him to come in. If you've been on our email list, you know, of course, that we're starting the Easy Gaps training next week. And this is a system that Alfonso has perfected. It's proprietary to him, and he does amazing things with a relatively small day trading account. And so there's a couple opportunities to learn about that. We're going to talk about gaps today as our theme. And then this evening, we're actually going to go into Alfonso's personal trading account and look at what his results have been over the last quarter. One of the things that I think makes TradeSmart unique out there in the industry is we eat our own cooking, and you guys are always welcome to see the public TSU trading account, and then the instructors manage their own public trading accounts as well. So we're going to dig in, take a look, and see what you can do with a little bit of strategy, a whole lot of discipline, and some relatively small trading accounts. It's really, really remarkable. So with that said, I think we've got everybody logged in here. Chris Burgess is going to be getting logged in. Are you here, Chris? I see Rebecca in here, but I don't see Chris. There's Chris. He's literally, as I'm saying that, logging in right now. So I'm going to start things off with a quick market update. Of course, if you guys remember where we were last week, and I might need to get my, oh, it is working. Last week, let's go back 5 days. 1, 2, 3, 4, 5. We were sitting right here in the market last week. And of course, you remember the theme of last week was dealing with extreme overbought and oversold levels. And my perspective on the market at the time was that we had pulled back to a Fibonacci retracement. And if you guys remember at the time, we'll pull up the stochastic oscillator here. Stochastic was actually, no, it was MACD that we were looking at last week. MACD had gone from being wildly overbought to just coming down and starting to be oversold. It was actually stochastic that I was thinking of. We were sitting here last week. Stochastic was at the lowest, one of the lowest points that it had been really in many, many months. And if we zoom out here, and stochastic is a range-bound oscillator, even going back to 2020, Man, this is incredible. I actually didn't go this far back last week, but 2020 lows were similar to what we were experiencing on stochastic current events. And this was a pandemic over here. All this was, in my opinion, was just a drastic little pullback. Now, whether it's going to continue on bearish or bounce and go up, I don't know. The tools I have in my tool shed do not give me a crystal ball to say, okay, this is definitely a new bullish trend starting, or this is a new bearish trend starting. What I did know for certain is that this is unsustainable. And if we look even during the downtrend, when stochastic had become that oversold, it was only a matter of time. It's hard to do both of these at once, the cursor and the drawing tool. But each time that happened, I'll just hover over some of these. It was only a matter of time until we saw a nice little bounce on back up. And so we were talking last week in the trading show that from a probability perspective, I was looking at this as bouncing up off from this Fibonacci zone, which is amazing, and heading back on up towards this red box. And I had been in a bullish position just before we launched. I exited that bullish position. I was looking at this candlestick right there. That's where I got out. And I was also looking at the stochastic on a 15-minute chart here, starting to get overbought and heading back down oversold again. And it's the same exercise, y'all. This is a little bit distorted because we've got the intraday data in here, but it really is not rocket science to figure out when this thing is overbought and oversold. Now all you're looking at is the real daily data. And last time we came back down through overbought, we retraced on back. Same thing here, not quite as extreme as a level. But I had a really nice little run from right, where is it? 2 days ago. Right about in here is where we got into the trade, shot straight up and right to almost to my target. I didn't want to get greedy. So as we started to pull back, the stochastic started to pull back, I'm out of that thing. The messages are on Discord for those of you that are in our TSU community and part of that Discord channel. I posted when I entered that trade, and I'll need to go and post right after this session that I exited that trade. But that's the benefit of understanding when the market is at overbought and oversold levels. Now, I'll wrap up my piece of the puzzle here, and then we'll go over to Burgess, and we'll give the remainder of the time to have an interview with Alfonso. But, you know, as far as I'm concerned, we've pulled back to this Fibonacci zone. That means as long as we trade to or within, but not below, not sure why we're getting boxes there, to or within, but not below this green box, then we must maintain that the stock, or in this case, the S&P 500, could bounce and continue a new bullish trend higher. And in hindsight, we'd look at this and say, oh yeah, that looks like what new bullish trends do. Conversely, this red box, which is established by measuring this recent wave right here, as long as we trade to or within, but not above this red box, we simultaneously could be in a bearish move as well. So it may be a little bit of a waiting game here for the next few days, at least until we get a break down below the green box or a break above the red box. It was nice for the market to give us such an overbought condition. We went bearish right here, and it was nice for the market to give us such an oversold condition at support, and we were able to go bullish right here. So we'll see. There may be some individual stocks that have some trades setting up, but really when you get into this scenario, that's when you need to have a system like Alfonso's gap system. And I'm excited to hear what he has to say about today's gap and how he was able to play that in individual stocks he was able to play, because that's going to give you some more possibilities than just waiting for the entire market to reset and figure out which direction that it wants to go. Chris, I'll take a breath here and let you jump in with your 2 cents, and I'll stop sharing my screen so you can share yours. I know you and I, we can talk about Scott behind his back today, because you and I were of a little bit of a different opinion than Scott was last week. I feel like we were right. It's not too often we can say that, but you know, it's not bragging if you can do it, right?
Actually, could you pull your screen back up with the 15-minute chart?
Yes, I can.
Now, I was a couple minutes late, so I just want to double check. You were looking to exit a long position, is that right?
Yes, I just exited the long position 30 minutes ago, right on this 1030 candle.
Cool. And when did you enter that?
It was right around, trying to remember which candlestick it was. I think it was this candlestick right here, September 6th at about 10 o'clock.
Okay, so a couple days ago. So what I wanted to point out here to people is, look at what Stochastic was doing pretty much all day on the 7th. Notice how it was in overbought territory, right? But Josh isn't exiting his position as soon as it gets to overbought, because as you can see, stocks can stay quote unquote overbought or oversold for an extended period of time. It was basically overbought for the entire day, and then it just got more overbought today, right? So Josh isn't exiting his position until it starts to dip down below that overbought level, right? Once it starts turning and it goes around, that's when he exits his position. So that's just what I wanted to point out. I don't think I have anything different to add to the market analysis.
Yeah, I think it's a very important distinction. And the same is true on the inverse, especially in a downtrend. Where it gets tricky is in what I would call more normal or standard market conditions, where we're kind of not in this this free fall that's yet to be determined if it's going to continue or stop. Outside of that condition, the market does not tend to stay oversold as long as it can stay overbought. But for current events where we're all right now, we need to be aware that, like back here on August 22nd, it can get oversold and stay oversold. Same is true on the daily chart as well.
Yeah.
So I just look left and say, what's it been doing recently? You can see we came back and forth here, but even these little back and forth moves, when Stochastic got so oversold, I mean, it goes up a little bit, and then you've got to decide what your parameters are to exit that trade if you want to trade counter trend. It's not typically my jam, but this was so egregiously oversold. We had one back here that was similar, and then you got to go all the way back to 2020.
Yeah, just look at the shapes of those stochastics, right? Like look at what it looks like above 80 and look at what it looks like when it's below 20. When it's below 20, you get that V shape, right? You get a sharp, it's down, and then it stops being down and it bounces up again. But when you're above 80, you get kind of that like M shape, right? Where like it comes up and it just kind of hovers up there for a while before dropping down. You don't get the same sharp like up and then straight back down very often like you do on the downside. So when you're looking at indicators and you're using them to, come up with trading ideas and trading plans and all that sort of thing, look at how they behave, because they'll behave differently in different types of environments. So this is a good example. When Stochastic is overbought, it can stay overbought for longer, but when it gets oversold, it doesn't tend to stay oversold. Even around like May of this year, you had a bunch of choppiness, but it kept going between oversold, not oversold, oversold again, not oversold, right? It was like daggering back and forth between there. It wasn't staying consistently oversold. So just something I want to point out to people, like pay attention to the characteristics of the indicators that you're using and use them to help inform your decisions. So applying that to stochastics here, if you're looking at this and you see that the market is in overbought territory, that doesn't mean we go short it right away, because the market can keep getting overbought and you can get stopped out of your long before it turns. So you want to wait for those confirmation candles. If you're exiting a long position like Josh was, another tool that I really like, speaking of talking smack about Scott behind his back, is Scott's higher candle close, lower candle close candles. So I would look for the next lower candle close while Stochastic is descending. That would be a great time to exit a position.
Yeah, I'm on the 15-minute. There's nothing magical about the 15-minute. It's one I've been playing with all year, but if you like a 30-minute, which I know Alfonso uses a lot, we're going to hear from him in just a second. You need to dial into the framework that works for you. But I think that's really well said. I've never described it as V's and M's, but you hit the nail on the head, Chris. That's exactly what it is. It's V's on the bottom and M's on the top. W's are the exception. I probably will, if I'm being candid.
All right, I'll shut up now. Let's get Alfonso in here.
Yeah. The man, the myth, the legend. I know there's several that are on YouTube as well. Welcome to the YouTube audience. We've, of course, got our live Zoom audience here. I mean, I guess we're all live, but only the Zoom audience can ask questions. Part of our TradeSmall All Access community. Many of you who know him, you love him. Alfonso Esposito, the man taught me everything I know currently about risk management. I'm grateful to Alfonso forever for that. But Fonzie, it's good to have you here today. And what I'd love for you to focus on are gaps and talking about maybe specifically we've got this current market environment where it's in limbo. We're not sure if we're going up, we're not sure if we're going down. And that's the beauty of your strategy. It really doesn't care, does it? You can just find the stocks that are gapping and then apply the right strategy. Let me know when you've got let me get back to my thing here so I can make sure your audio is on. Well, there you are. Hey, brother.
Yeah. And I hit my video. Can you guys see me?
Yeah. That's the quality hat. I love it. I almost wore a hat today.
Did you? I figured you might, because like I like my hats.
Hold on, I got one right here. BRB.
All right, so good to see everybody. Yeah, and let's see yours. Okay, what is that? What does that say? Callaway?
Courage.
Oh, courage. I like it.
Courage is contagious.
Yeah. So welcome everybody. Yeah, it's been a while since I've been on, I think, but it's cool. Yeah. And I love your guys' analysis of the daily market. But what Josh asked me to come on and speak about today is I'm going to be teaching this GAPS course next week. It's going to be like a 4-night class, like a Tuesday, Thursday, hour and a half each class. And then I'm doing these 2 live classes when the market's open the following week on a Tuesday, Thursday. So it's going to be a lot of content. Josh wanted me to come in and just talk about a little bit about GAPS. And so what I thought I would do today is just talk a little bit about trading GAPS intraday. But during this class, I'm going to be doing both. I'm going to be talking about intraday trading of GAPS, but then also non-day trades, or as some people call it, like a swing trade, like, a couple of days to a week or something like that, depending on your time frame. So I thought I would do that. I'm going to answer any questions that you have, but I did put up a couple of slides just to give you a little bit of a flavor of what the class will entail for next week. And then I'm going to show you my results from this week, which I think you guys will like. I like, but we'll see. But so let me go ahead and share my screen. Let me go here, and I got to go to right here. Screen 2, yeah. All right, can you guys, yeah, you can see GAPS Made Easy. So that's kind of the name of the course, but I'm just going to show you just one slide, and then I'm going to just show you the trades from this week, and I'll answer questions, and I have a couple of other comments and stuff that I can go over that I wrote down on my little notes right here. So one of the questions that I always get is like, why trade earnings gaps? And obviously other gaps as well, but primarily during that earnings season is when you can really find just awesome trade opportunities, as I like to call moments in time, where you just have a lot of things aligned and you can really capture a fast move really quickly. And so I'm going to be answering that question in detail during the course. And then I'm going to be talking about the psychology behind earnings gaps. I just got to get my little pointer up. Hold on a second. Got to do that so I can point. There we go. Over there. So I'm going to talk about the psychology behind earnings gaps next week as well. And then I'm going to talk about the major components and gap analysis, because I've been trading gaps for like 10 years now, and there's lots of information out there on gap trading. But I used to run a day trading room. I was a moderator in another one, and so I've seen all of the education that's out there on gaps. But one of the things that I've been doing over the last 5-6 years is really kind of thinking about the best way to present it to students, because most intraday traders, aren't successful. They may make some money and then they give it back, but very few of them have that rising kind of consistent equity curve. And that's what really all we want, is to make money each day if you're a day trader, at least at the end of the week, right? You never want to have a down week. That would be awful. And so I started thinking of like the way a lot of people teach about gaps. And so I started thinking about it, and I was like, most intraday gap traders don't necessarily get those consistent results that they want. But they're all following the same education. So like you got, 80% of the people inconsistently trading intraday, but they're all following the same education. So I was like, we should just do what if you just did the opposite of what was out there? You probably get a better result, right? So I started to just kind of hone in, and that's what kind of led me into trading from just a 30-minute time frame. Most people like get into that 1-2 minute stuff, and they get obsessed with it, and they over trade and what have you. And I started to like, what if everything? Because people would be like, well, what if you want to be done at 9 o'clock in the morning, or at my time, or like a half an hour or an hour? How can you do that if you're trading a 30-minute chart? And initially I was like, well, yeah, that seems to be an obstacle. But then I was like, no, it's really not. And I'm going to show you today a trade that I took that was actually 2 this week that I took from the 30-minute chart that were done within 30 minutes. So like a half an hour into the market, I was all done. And so let me just kind of go through that. So I'm going to talk about the major components of gap analysis next week, but then I'm going to break it down into the major one, like the most important one. I call it the secret sauce. Like, and once I understood this, it totally revolutionized my my understanding and my ability to consistently carve those profits out each day. And then I'm going to go through how to trade earnings gaps for day and non-day trades. I'm going to exactly right from my plan. I'm just going to basically, my slides are going to include my plan of 4 high probability day trade setups that I use, and then 2 high probability non-day trade setups. And then I'm going to talk, obviously, because I have to, because it's so important, risk and trade management. And then I'm going to show lots and lots of charts for each class. So what I thought I'd do before I answer questions and go over some of the notes and stuff that I wrote down is I'm just going to show you the 4 trades that I've taken this week. So I've taken 4 trades. Now, when I show you the slide, it's going to show 11 because TradeStation calculates tickets. So anytime, so if I enter 1,000 shares and I sell 300, 300, 400, trying to do the math, then that would show as 4 tickets. 4 tickets, but TradeStation would calculate it as 4 trades. So I'm going to show you the actual 4 trades that I took. The reason it's going to show 11 tickets is because I didn't like buy and then sell all of it at the same time. I sold along the way. Okay. So first off, here's just my results from this week. So Tuesday, Wednesday, Thursday. So $3,480.50. Now, when Josh says I don't have a big account, I mean, what I do, you have to have 25,000 to be, an intraday trader, to get the 4-to-1 margin, to get things to clear in the same day and all of that stuff. So, but what I do is, I could keep 100 grand, 200 grand in my account if I wanted to, but I don't. What I always do is I never keep more than 30. So at the end of the month, I withdraw my profits back down between 27.5 and 30. And the reason I do that is because my goal is $1,500 to $2,000 a day, and I don't need any more money in my account to do that. And there's also some other benefits that I've just found through my own trader personality, and I'm going to spend some time talking about that next week as well, is understanding your own trader personality. So for me, I know I trade best when I'm in one trade at a time, and when I'm taking trades that have a kind of a larger R. I mean, I for the size account that I have, I use like 2% of my account. But with the batting average being so high consistently over a period of trades, I'm comfortable doing that. And so I don't need to be in 2, 3, 4 trades at a time to reach my daily goal. Okay. And then so here it was 11. So I've batted 100%. So every single trade I've taken this week has been a winner. Now, normally I'm like 70%. So this has just been, I guess just better than normal. Okay. So I'm going to show you the first.
Probably because you knew we were all looking at your account this week.
What was that?
Probably because we knew we were all looking at your account this week.
Possibly, that could be it. So actually, this is the one trade from last week, and I'm going to show you the 4 trades from this week. So this was ZIM. It was so this is what it looked like prior coming into the morning, because the stocks, when they gap, after, if they announce, usually in the afternoon, they're going to start to trade from the institutions in the aftermarket, and then they'll continue to trade in the morning. And so this is what the chart looked like coming into the gap. And then here is what it was looking like in the pre-market. Okay. So, the off-colored candle. So the first candle of the day was actually this green candle. But before that, I just kind of changed the color a little bit so I can just tell the difference between the regular market and the pre-market. That's why I got these slightly colored green and red. So this is what it was looking like coming into the morning. Okay. And so one of the trades that I'm going to be teaching next week is just this 30-minute trade that I take. It often will occur at 10 o'clock or it will occur at like 10:30 Eastern Standard Time. And so this stock, just it opened up at, so this is where it's opening up on a daily chart right there. So it's opening up there. Okay. Which wasn't a great location. So it got sold off again, and then it closed with a small little green candle. It's one of my favorite setups. Entry is just right underneath the open of that candle, and then the stop is I used the high of that candle on the pre-market. Right, I didn't need to use the high of the day. If this is going to work, if it's a moment in time, then it's going to just go. And so that was the trade, and this is the result. So as soon as so the next candle opened up here. Let me get my little pointer again. Sorry. So it opened up. The next candle opened up. It just traded up just for a couple of ticks, and then it started trading down. So it triggered me in, and then it ran right down in an hour and a half to target. So that was the trade on Friday. And then Lulu. So Lulu had, this is what Lulu was looking. So Lulu was had earnings, and you can see the pre-market here on the day of the, so this was the actual day of earnings. So it gapped up to a turbo location. That's why, sold off most of the day. But you can see here in the pre-market that there was lots of interest in this stock. So the likelihood is that even though yesterday, the day before, had closed with a red candle, you can see as it started to pull down into right here, the prior day, which would be now new demand, right? It's cleared 3 candles, opened up here, pulled down into this demand area. You can see at the end of the day, the last 3 hours of the day, that price couldn't go any lower. Got up, got negated, and it tried to go lower. And so it kind of just closed near that demand area on the daily chart. So the next day, my plan was, well, if it can do like a little bit of a run up and then do a little bit of pullback or pause, then I'll look to play it over a red candle on a 30-minute chart. That's just one of the trades that I'm going to teach you next week. It's simple. It's like a 4-year-old can do it. It's so easy. So the first candle ran up, then it did the little final shakedown where it tried to go lower almost into the previous day's low, and then closed up with this red body. And so the entry right there with the stop. Now, again, I don't need to use the low of the previous candle because the shake and closing up here would suggest that this would be just fine to use that. Then I got this nice target up into here. And there it was. Next candle opened up, shook down a little bit, triggered me in, and then 2 hours later, right up into target. Okay. And so going back to this, based on the gap that it was earnings, how it traded in the pre and post market the prior day, how it stalled in here right at prior demand, it's very high probability that within a day or two, this red candle will get completely engulfed. And that's what it did in that one day. It just got completely engulfed, okay, with that close. And so then the next day, so here's how it opened up the next day. So this is that day of that trade that I just showed you all. All right, ran all the way up and engulfed that candle. And I still had identified that there was still some void or some profit potential up into this 336 area. And it's only trading down here at just 335. So my plan is to just see if in the first hour and a half that it would provide just like a little bit of a 30-minute entry for me. And so, and also I wanted to see how it would handle the top third of this green candle. Lots of demand in that candle. If it started to pierce this candle quite a bit, that would be a little bit more of a concern. I'd probably then take it off my radar or my list for the day. But anyway, it opened up and it kind of hung around, right? That top third of that candle. There's 225, 325 would be right about in there. So just hung around that. A lot of these little indecision candles, traders are confused. And after that first hour and a half, it gave just a traditional 30-minute setup, which is one of the trades I'll teach you next week. So the entry is over the open of that little red body right there with a stop below it. And then target into the previous high of the day, which would be more than 2 to 1. So that would, be able to get me really, really close to my daily goal. And then, so there it was. The next candle opened up, triggered in, and right on up to the high of the day. It actually traded a little bit higher, but I exited out of the trade at 3, right up at that green line right there. Okay. Any questions so far on those? And I'll continue to go. So I just think that sometimes it's visually good to see it, so that next week when you're in my class, you'll be like, man, I want to learn this stuff, and I'm going to walk you through how to do it, because it's really not that difficult.
So I just want to double check. I think if I know you well enough, you're not trading options, right? You're just trading shares. Is that correct?
Right. Yeah, I'm trading the shares, and yeah.
Are you ever taking the pre or post market setups, or you're just waiting for the actual cash session?
So it's a great question. So I used to always just trade from setups that happened after the market opened, but in my desire to be done in an hour, I quickly learned how I can utilize pre-market data to give me an entry crisp, but once the market opens up. And so like today, I'll show you in a few slides what I mean by that. So I will use the 30-minute candles in the pre and post market to identify where price had either taken off the prior day or in the pre-market where the stock has had a run up and then it's kind of paused, and it's giving like a 30-minute setup in the pre-market, but it's just likely not going to trigger until the market opens up. Does that make sense?
Yeah, gotcha. Thank you.
Yeah. And so, so this is another trade that I'm going to teach next week. I call it the hook trade. And I'm going to teach it next week, but quite honestly, I would, it requires a really good understanding of price action and having done it for a series of trades that I know that the probability over a collection of trades is going to produce positive results. But it's a little bit more difficult to teach because it's a little bit more unclear. It's just, I think, from my years of experience of doing it. Intraday, though, and I'm going to show you one that from today that I didn't take, and I'm going to tell you why I didn't take it later, because I think it'll be a great lesson. But the hook trade, once the market is open, is much easier to identify those trades. But anyway, this was ISEE, and that's the other thing that I wanted to just say, that most intraday gap traders, when they're taught to trade the day of the gap. It's like, okay, well, what's gapping today? What's gapping today? What's gapping today? What's gapping last night, so that it's going to show, this movement in the pre-market today. And while I'll do that, I'll trade day one gaps, meaning it's gapping the night before or that morning, and it's opening up and it's the first day of the gap. I will trade intraday on those. But I got to tell you, and not a lot of people do this, but the easiest way to trade gaps intraday is to trade gaps after the first day, and even sometimes multiple days after the first day. And the reason is because you now have more price action to help you guide you into the likely direction of that stock, and to provide these really clear, easy setups, where oftentimes on that first day, especially if it's a higher price stock or it's a stock that doesn't have like lots and lots of volume like Apple or Microsoft, the opening price, like in that first hour, the difference between the bid and the ask is oftentimes so wide that if you were to just buy the market and then immediately had to sell the bid, you could lose just a whole bunch of money, just because the spread might be, you might buy a stock at 180 and then the bid is like 99.70, $1.10. So if now people say, well, you can use limit order. Well, yeah, but oftentimes you're going to just get skipped on those. So the wider the spread in those early mornings, the more difficult it is to manage your risk. And so it just kind of becomes like a crapshoot. So now highly liquid stocks, sure, day one, I'll take those all the time if I get the setup. But oftentimes I find that the easiest way to trade gaps is after they've already gapped. Let them, so like right here, ISEE, perfect example. I mean, this stock had this just insane day, right? And this wasn't earnings, it was news. And I would never have traded this on day one anyway, because I think it's like one of those biotechs and what have you. And so they're a little bit wacky. But you can see the amount of, this is the normal average volume. And then look at this day. Right. So in any event, it closed like this. And then, so the next day I was like, boy, this area right here, this 1420-ish, 1420-ish, right, is now new demand. I mean, it's cleared, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 3 weeks of trading. So if this thing were to like open up or pull back into this area, I would be willing to just hook it, meaning I just put an offer out at that area. And then I would base the stop based on how that hook entry would be occurring. So let me walk you through this trade. So this was the pre-market. So you can see this was the date. This was that day right here. It opened up and it just ran up. And then in the last hour of the pre-market, it had this candle here and then this little kind of candle here. And the previous, that 1420-ish area is right here. So I was like, I'm just going to put an offer out at 1420. And where am I going to stop it? Well, I'll stop it underneath this big wide range candle right here. Okay. So that was what I did. And so you can see I got filled at the white line. It went against me for a little bit, not much, like, looks like 20 cents. And then in the first half an hour, traded right up to 15. 500 turned into 1,000, right? Risk 500, 2 R's into 1,000. So that happened in just that one candle. Opened up. As soon as it came down, it was like order filled, and then it just right up. Why? Because this is a really great demand area. If we go back one chart, this is the old pivot, old supply resistance on the daily chart, and it just ripped right through that yesterday like nothing. And so for sure, if it were to pull back into here, this is now going to be a great area where all of the institutions that bought in this candle are going to be able to buy it more, add more shares in. They're not done buying in one day. They're going to be adding more shares in. And they're going to be able to do it at a better than average price. They're going to be doing it at a phenomenal price. They're not going to want to buy it later when it's way up. They're going to be able to add in the morning early and then get that like push up. So it's kind of like, I call it the hook. I'm hooking, and I'm just like, if you ever watch Caddyshack, where Rodney Dangerfield, hooked that guy and he was just getting carried through the thing. And before he ran into that guy's little yacht that he had, that he was christening. So it's like that. It's like hooking on to like this big steamboat, and you're just getting pulled along for that nice little 15 instead of like 15.50. Well, in that moment in time, I knew that there was going to be a struggle. Now, ultimately, I figured it would blow through that. But in this moment in time, for this one particular day trade, 15 would seem to be a pretty logical area, because it's all of this little bit of congestion here. It's going to take a little bit, maybe a couple of times, to absorb that before it'll continue higher. So that was that trade. And then if you look at ICE, that wide range bar from that gap day ripped up. I think today it traded maybe up close to 18 or 17, close to 18, I think, today, if you look at it. Okay. All right. Now here is the one from today. PDD. And so now PDD, it gapped way back here, and then it gapped again here. And so this is one that is like one of those carryover ones, those follow-up ones that the stock is in play. And now the chart is giving me lots of points on the chart where I can see where price has moved really quickly away. So coming into today, this is what yesterday looked like, where it traded right down to the top of that red candle, which is new demand. And then it ripped up, closed near the high of the day up in here. So this morning, I wrote that down yesterday. I was like, PDD, check it out in the morning, see how the pre-market is doing. And I remember that it paused here yesterday. So it had that first red candle, then it got completely engulfed and it ran up, and then it paused, and then it ran up another almost $2, $1.75. So this pause area was suggesting now, based on the bigger time frame and price action in the pre-market, I mean, from yesterday and in the pre-market, that there's really nobody left to sell at that 67.25 area. You know, there was just a few sellers and then it ripped again. So I noticed that it was opening up near that, like it came in and it started its tail. So I said, and this is, Chris, the entry that I'm talking about, where I'll use the either an entry from yesterday or the pre-market. So I said, boy, as soon as it triggered over this candle yesterday, this 30-minute buy setup, as I would refer to it, it ripped $2. And so I said, that's what I'm going to do. I'm just going to enter it right above the 67.25 this morning. And that's the stop that I was going to use right there. And so the stock opened up. By the way, it was also inside this big demand candle here as well. And it just traded up, triggered me in, and then right back to the top of this pivot, just hour and a half, boom. And these are the simple trades that I do. Any questions on those? And the beautiful thing that I love about gaps, before you have any questions, is it requires no indicators. I have no, I don't, now all of that stuff is awesome. It helps, it helps, right? But when you're trading gaps, because I'm like, if I have too many my son, gonna go. IT and I went down there for the opening game, and we went to their soup store, the superstore they call it. Which, by the way, now Josh and Chris, they have this deal with Lulu, so you can buy part of their stores like Lululemon with the Alabama gear on it. And so my wife's like, "Oh yeah, you can get whatever you want." So he buys like two $75 t-shirts with an A on it. I'm like, "Oh my goodness gracious!" You know, like, good thing it's been a good week and last week, right? Because it's like the kid is like. It's just ridiculous. But in any event, I go into this superstore and we had walked like around campus and it was hot. It was like 90 degrees, sweating like a stuffed pig. And then we go into the superstore and there's like 500 people in there and they're all really up close to me. And I almost like start breaking out into hives. I just don't, I love people, but I don't love them that much to be that busy in a store. Like I tried. And that's what it is when I have lots of stuff on my chart. Like it freaks me out. That's why like maybe early on, I just said, I can't deal with all of those lines, but like people like Chris and Josh, unbelievable, right? And they use them consistently, which is the key. But the nice thing about earnings is that you don't need any of the moving average. And in fact, most of the time, the people that use like the 8MA or the 20MA early in the morning, the time the MAs match up for them, I'm already out of that ISEE trade for $1,000 before it even sets up for them on even a 1 or a 2 minute chart, because the moving averages are lagging compared to what actual price is telling us on the chart. So that's one of the things I love about it. So I'll stop for a moment, see if there's any questions, and I'm going to look through my notes as well.
Yeah, those are on YouTube as well. We can't always take YouTube questions, but it's kind of unique having Alfonso here. So if you're on YouTube right now and you've got a question, go ahead and type it in. Of course, all of our TSU community that's here in Zoom, you guys are welcome to ask questions. Also, I put in both the Zoom chat and the YouTube chat a link. If you want to hear more from Alfonso, he's going to be doing an interview, live Q&A, going a little bit deeper tonight in a webinar together with me. So that link is in there as well. You can get registered for that. And, you know, I think the thing that's so amazing to me about Alfonso and watching him work is it seems so mysterious until you know the elements that are the decision pieces. And it's humbling to me because I understand when I'm looking at my chart, to me, it makes total sense. And then everybody's like, what exactly are you looking at? And those are the pieces that Alfonso is going to be going into during his course next week on easy gaps. So it's not thinking, it's just doing. You know exactly what the setup is. It's well defined, and you can enter and exit. So if you find yourself like, why was that candle more important than that one? That's why we need 3 weeks of training to make sure that you've got that all mastered before we send you on your way.
Yeah.
I'll keep you briefed on any questions that come in from YouTube, Alfonso.
Got a quick question.
Yeah. And I'll just share a couple of other concepts. So here's now, I just got out of the slides and I'm back on the live chart, right? So this is where the market is right now. And so, and again, once you start to understand the power of price action, these things they become so much easier and visually to see. So like, let's just talk about that PDD for a moment, right? So here was that price action yesterday. Like the last time price was at 67.25, in 3 hours it ran to 69, which is why I bought it this morning, and it ran to 69. And then it does this 3-bar pullback, literally to the, I mean, as soon as it gets to 67.25, there's nobody left to sell. And now we're already in like this 50, 60 cent move higher, which will more than likely, unless barring something happens, will likely trade back up to the high of today and over the next day or two, continue on higher. So, so the more that you, the more that you start to, and that's one of the things I'm going to be teaching in that class, is how to recognize these patterns that individually mean nothing, because the outcome of each individual trade is unique. But once you can start to understand that a series of light trades starts to become massively predictable. And so that's how I base all of my entries, is specifically on that. And the other thing that I'm going to teach a lot next week is the power of the pre-market. So let's talk about this. Like an example is this W, right? And there's a lot, like if you go on like YouTube and stuff, and you'll hear like, gap and goes and perfect gap and goes and gappity go. And this, like where traders are taught, like if it's gapping under a green candle, then people are trapped and you should just short it at the open, or like take a 1 minute low or something like that. And while that sometimes happens, it's the equally amount of times that doesn't happen, because the most important thing is where the stock is gapping to, the location of the gap. And so oftentimes the best way to break yourself of getting caught in those, what you think is going to be, I'm just going to short at the open or a 1 minute low, and this thing is going to rip down for me, is the pre-market allows you to see this. So like here's this W today where it's opening kind of just, just a little bit below the green candle. So people are like, oh my God, they're salivating. Here's like the last 3 days of, the last 6, 1, 2, 3, like 4 hours from yesterday. And so now it's opening up down here. So people are like, oh my gosh, it's like, this is going to be awesome. I'll just wait and short like a 1 minute low or 2 minute low or 5 minute low or something like that. Well, maybe, right? But that, if you can show that every single time you take a 1 minute low, that you're going to win more than not, then I would do it all day long. But if you're just randomly saying, well, it's just gapping, I don't know, like that's what I've been told, like gappity go, perfect gappity go, whatever. No, because look at the pre-market. So coming into the pre-market, right, the stock now has traded down into this little lower area here, over here on the daily chart, which is, arguably a demand area.
We're losing audio on you a little bit, Alfonso. I don't know if you can hear me.
I guess it's just an audio challenge day. You weren't here in the beginning, Chris, but I had myself muted for like the first 45 seconds. It was amazing.
Classic
scenarios. Inevitably, what happens is that you get this, where the stock doesn't know what to do, right? Anyone that's shorted it out of the gate got likely taken to the cleaners if they use the high of the day as a stop. Tried to play it long, it just becomes like too much confusion. So I'm going to walk you through how that is next week. And then there's another example today, which is AEO, and I'm going to explain this one here. So AEO also gapping under multiple pivots, under a green candle, the whole thing. So again, the way I was taught was, oh my God, just like short the open. This is like a gappity go. Well, maybe, but I don't I've over a series of trades, I don't think that that's an edge. And I've proven it over and over in it's not. And the way I did it was, again, by the pre-market. So I'm looking, I'm like, this thing is kind of forming that like little rounded bottom, which is, by the way, one of my favorite patterns, the rounded bottom, or, some would refer to it like a W or what have you. But, now again, this is only in a 30-minute time frame. But here's the daily chart. So if I go out to like a weekly, I can see that, there's the likelihood is the stock probably can continue down lower. So if you're looking at it from a longer time frame, for sure. That's being able to money the moment in time trade. The way I used to do it is I'd have like 10 stocks and I'd have all of these small little thumbnails, and I'd just be like the Wild West, just trying to, oh my God, I missed that one. I missed, and my whole fear of missing out ended up causing me to miss out because I only have 2 eyes. I can't look at 10 thumbnails. I mean, nobody can, right? It's very rare to do it. So I said, what if I, instead of fear of missing out, I replaced that with the power of focus? And I just picked 1 or 2 stocks, 3 at the most, and come up with a pre-market plan of exactly what I wanted to do. So I'll show you what I talked about on AEO. Here's my notes from this morning. I don't know if I did it the right way. AEO, short on a hook into 1080, or short under the pre-market low, or a 30-minute traditional setup, like some of the ones that I've shown you, okay? If none of those 3 things happen, forget about it. Now, here's the thing that I wanted to say is, let me just find it right here. Oh, which is, you never want to impose your beliefs on your trades. And it's so easy to do it because we're human beings. We're all jacked up and broken, and we all want to be right and significant and have egos and all of that stuff. But if you impose what you think is going to happen, it ends up being colossal disaster. Now, you might get it right 1 time, 2 times, just like I can go to Governor's Club down the road and out of 18 holes, I can hit 2 drives, 3 maybe, perfectly down the range. But if the guys that I golf with, they would never bet on me that I can do that 14 times out of 18, because they're like, we know over a collection of drives, you suck. You might get lucky every once in a while. I might be right a couple of times, but that doesn't create it to make you into a trader. Now, here's the challenge. Even the best of traders, Chris, Josh, myself, others, they will impose their beliefs on the market. And I did this with AEO. In fact, right on my notes, it was like on a shape to 1080. If it can trade up to 1080, I'll just hook it at 1080. Now, where did I come up with 1080? Well, let's go back to the daily chart for a moment. So the 1080 was basically, you can see that the line was basically the bottom of this pivot. So even though it was gapping under a green candle, and I'd be like, oh, let's play it as a gap go or whatever. I was like, no. That's a terrible location. I don't want to short it there. Now, if it opened up and it traded down, that was my other option. And then it gave that little green candle underneath the pre-market low, then I would play it as a traditional 30-minute Braveheart, as I would call those, or Zebra, I'm sorry. But otherwise, it has to go to at least 1080. And so here's how it played out. But here's what I did. I imposed my beliefs. I was like, I already did really well in that PDD trade. Now, normally I would just be gone, but I knew I had to do this thing. So I was like, I don't know, should I take the AEO? I'm like, well, I don't know. Maybe it'll work. Maybe it won't work. Maybe, I don't know. Maybe I should wait till 11. Maybe. And I started to overanalyze it because I started to impose my beliefs on it instead of doing what you're supposed to do when you're supposed to do it, whether you want to or not. So once you know exactly what your moment in time trade is, your edge, as I like to refer to it, then every time that presents itself, you have to take it, because I don't know and you don't know which trades are going to work and which trades are not going to work. Can't pick and choose. So anyway, this thing opened up. I was like, okay, right? Any gappity goes, and that first little bottoming tail got taken to the cleaners. And then look, and I mean, literally it traded to 1081. I mean, but here's the thing. I was right, but I didn't make any money. See how disaster that is? You can be right and not make money. Now, why didn't I make money in this trade? Because I didn't take it. Why didn't I take it? Because I imposed my beliefs on it. Because in that little moment, fear crept in and I said, what if I'm wrong? What if I'm right? I don't know if it's going to be right or wrong. There's no possible way that any of us can determine if you take a single trade that will work. But in that moment, I lost my way. I have to continually monitor my susceptibility for making errors. And I made an error. It wasn't the market's fault. It wasn't a market maker. It wasn't TradeStation. It wasn't that I had to come on at 11 o'clock. It was none of that. the only reason I didn't take this trade is because I didn't monitor my susceptibility for making errors. Because if I don't take a trade that is my edge, that it's that moment in time, that's an error. Now, if I take a trade that's a moment in time and it wins, that's not a great trade. And if it loses, it's not a bad trade. It's just the right trade. You have to take your right trade, regardless of what you think or what the outcome actually is. That's how you make consistent money. So I actually had loaded up 2,000 shares to short this. And so let's just, and 1040 was going to be my target. So, it's $800 I left on the table. Why? Because I didn't monitor my susceptibility for making errors. But here's the thing. Even if I took it at 1080 and it continued higher and I lost $500, it's still the right trade. And so sometimes when I talk about the psychology of it, I actually listened to Chris Burgess speak on it a couple of weeks ago, and he used a little bit of a different language. I think it was something like relative that he used. I forget the word that he used, Chris, but I was like, yes, Chris is talking the same thing. It's like when you have a plan that over a series of trades works, that's it. Like just now it's the hard. So that's the simple part. You found a trade, a strategy that has an edge. Here's the hard part, right? Because you'd be like, well, that's simple. All I have to do is do it all the time. Well, great. Yeah. All people need to do is walk around the block and eat an apple and they'll probably be skinny, but they don't. They substitute it for a Hershey bar and they sit on the couch and watch football instead of going out and walking around the block and eating an apple. Why? It's so easy to eat an apple and walk around the block. It's so easy to have a strategy. The difficult part is that we making errors. So the guy are in some of the couch, he's got high cholesterol and overweight. And we do that in trading where lines losing money.
Hopefully Alfonso comes back soon. I feel like
and so, and I'll tell you, yeah.
Sorry, your audio is cutting in and out a little bit on us. And I was thinking, it reminds me of this Seinfeld episode where Jerry's going through this whole big elaborate thing, yada, 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 but you can't hear him. Like, it's just all hand motions, like, and that's how we got in, like, whatever the crazy situation is that he was in. So it's like, we just show up for the punchline here. I guess you're gonna have to come tonight to find out the rest of the story.
Oh yeah, I'm sorry, I didn't realize I was breaking up there, but yeah, most people, here's the other myth too, is that you need like the tons of screens and the best of everything. That used to be part of my story. Like, if I just had more screens, if I just had more of this, if I just had this, if I just had a bigger account, if I just had blah, 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 then I would be successful. None of that stuff matters, right? I mean, I trade, this is what I look at every day, is the 30-minute chart like this. This is exactly what my screen looks like. And then my daily chart over here. And I didn't delete anything from my screen or add anything. This is what I look at when I trade. And oftentimes I'll just do it right from my phone, especially if I'm taking trades later in the day where the candles have already been 2-3, the market's been open for 2 or 3 hours. So, but in any event, that's what I'm going to be teaching you next couple of weeks, is just being able to identify these high quality gaps, and then how to trade them for 500, 1,000, 1,500, $2,000 a day. And here's the beautiful thing. Even if you make $300 a day and you do that 20 out of usually about 22 days trading a month, you just do it for 20 days. That's $6,000. The average income in America isn't $6,000. And then you start to get better at it, and you start to get up to 2,000 a day. 2,000, right? You're approaching $500,000 a year by taking 1 or 2 trades a day. And yes, you can make that money with a $30,000 account. You don't need to drop $300,000, $400,000, $500,000 into your account to do it, because the brokers make it so easy for you. They give you 4-to-1 margin. It's beautiful.
And free commissions.
And it's free commissions, right? I mean, that used to be one of my things. Commissions are too expensive.
Yeah.
Right. So the market is the market. It's always been here. And when commissions were high, people made money. When commissions were super high, people made money. The only way that you can become consistent in trading is to work with what you have and create a discipline and a series of disciplines around just doing simple things and repeating them over and over and over again. And so I'm going to hopefully teach you that over the next couple of weeks. And so I would highly join this class. Like I said, I'm going to cover in 4 trades, the 2 30-minute traditionals, the hook, and then the carryover trade, and then the daily one. So my biggest swing trade for the month, and that was just my day trading account. My biggest swing trade for the month was this Zim, right? This thing was foul. I mean, again, I've had some swing trades that didn't work, or I, ended up losing a little bit, making a little bit, but this one was just unbelievable. And again, I don't know that this one was going to pay any better than the other one. This thing gapped down, closed, and so you can see the entry, and this thing just hasn't even trailed out even bar by bar. It's just been going. It's probably getting into some type of bigger demand area now, I would think. Let me just look. Yeah, I mean, probably will do a little bit of a pullback, but potentially could go lower here. But no, people are like, did I miss it? Yeah, you missed it at this point. Don't take it now. The time to take it was up here, not $10 later. No fear of missing out. There'll be another one, what have you. So I'm going to teach you these trades as well. I call it the continuation gap trades. Yes, over time, most gaps likely do fill, but not in the short term. In the short term, stocks will continue in the same direction of a high-powered earnings gap about 80% of the time. And if you're a short-term swing trader, that's good to know, because then you know that you're likely going to have that stock continue in the same direction over the course of 2 to 3 weeks. And you only have to be part of that for 2, 3, 4, 5 days in order to make your goal. And then you move on to something else. Okay. So any questions? Otherwise, I think that's it.
Just one real quick from YouTube, thinking about the pre and post market data. Is that primarily institutional traders that are behaving in there, and that's why we can get an idea of which direction it's going to go? Or do you think more and more retail traders are?
I mean, there's probably some retail traders in there, but the majority of it is going to be institutional traders, right? So if you just watch, like, if you put on CNBC at the end of the day, or Fox Business or whatever, and Apple announces after the bell, you immediately see the stock jump 15 points or drop down 15 points on massive volume. So the majority of that is institutions. There might be some retail traders now that are getting into it, but for the most, but that gives me an indication of how much commitment there is in the stock. So if there's lots of pre-market, and it's basing near the low of the pre-market, and there's a void on the daily chart, all the things I'm going to teach you next week, the likelihood is that stock's going to continue in that same direction of the gap. Now, conversely, oftentimes you'll get gaps that go up, and that's that was one of the other trades I was going to teach you next week, is the fade trade, where a stock gaps up, and sometimes it's even over multiple red candles, but it gaps to a really crappy location. And so in that moment in time, there's no really incentive for the institutions that created a gap to buy more shares there. They're like, we'll just wait for it. We've been buying it all afternoon, all aftermarket and pre-market. We'll just wait now for it to come back into a better area, and then we'll add up more shares. And so there's a really great early morning trade that you can do, where you're actually shorting against the direction of the gap if it's at the right location. There's some other things that specific points that I'll be teaching you next week, over the couple of weeks, to determine if it really makes sense to fade it versus to play it in the direction of the gap.
Perfect. So, and go ahead, Chris.
I'm going to sign up for your class, and
yeah,
one of the things that's really attractive to me about this style of trading is the fact that you can be done in 30 minutes, 60 minutes, 90 minutes. So I'm going to be moving overseas soon. And so my time zone is opposite. And I've done this before, where basically the market opens, at my time, it'll be like 10 p.m. And then, I'll put on my trades for the day, and then I'll wake up the next morning after the market's already closed, and then find out what happened. So I like this approach, and I'm interested in learning how you do these gaps, because I think it's something that could fit with my lifestyle very well, just to be able to get the trades in and be out. And then I can, sleep soundly at night and not have to worry about what happened to the market while I was asleep and waking up the next morning. So I'm really excited for this. haven't really done a lot of gaps trading before, so I'm coming at it fresh, and I'm excited to learn. So hopefully, if there's other people that would like to be in and out of your trades within, an hour or two in the mornings, this could be a very exciting thing to take. So I encourage you guys to take this along with me.
Yeah, and you can do it, Chris, with options. And I always joke, right? So you're amazing at options, right? I mean, and I always joke in my mastermind and stuff that the reason I don't really trade options is because, I'm 53 years old, be 54 in 2 more months. And I just in the last 6 months mastered the English language. And so I just, for me to learn Greeks is look, it took me half my life to learn the English language properly. So, but Chris, he's mastered the Greeks. And so that's truly, honestly, the only reason I don't trade options is because I just haven't made a commitment to master them. But you can absolutely take this strategy and apply it even with a smaller account, like Chris talks about, with options. And quite honestly, from a percentage standpoint, your gains would be bigger than my percentage because, I'm basing everything off of a 30 grand account when you could do it with a $10,000 option account and get the same results. And the beauty is that if any of you work with Chris, and Chris learns the strategy now as well and what have you, that he was going to be able to delineate which ones are not really the best from an option standpoint, because, sometimes the liquidity of the option or the open interest might not make sense. And so, being able to have the option knowledge and, maybe not necessarily a day trading account and then understanding gaps, you're going to be able to pick and choose which ones are going to provide you the best, bang for your buck when you're trading options. So, and the other reason is that I just am blessed that I can trade stocks. And because I just trade gaps, the probability or the likelihood of an earnings gap gapping and then the next day or 2 days later completely gapping in the opposite direction is anything can happen. But from a probability standpoint is very, very rare. So my risk of $500 per trade really is $500 per trade. I can't remember the last time that I had a stock that gapped on a non-day trade that gapped over my stop and I lost $3,000 instead of $500. I literally have to go back years to find that. And so that takes out that little bit of risk, because a stock like this Zim, right? Oh, I'm on it right here, right? So the likelihood of this stock, like the next day, gapping up to here and trapping a short it's so rare that would happen. So you can actually control your risk very similar to that you can control your risk with options, where you only can lose what you have invested in the calls or the puts that you put in. Like I said, I would have to look, but I can't remember a time that a stock within a day or two after completely gapped in the opposite direction. I can't even remember the last time it's happened. So it gives you that element too of risk protection than just trend trading. And you don't know, you're in Zim, say long, and then this happens, right? Well, yeah, if you put your stop here, planning to lose 500 and it opened here, you've lost 5,000. But at now, the likelihood of this stock gapping, completely the opposite way of the trade that you're going to take, very, very rarely that would happen. So there's some advantages to that. So cool. I'll have to have Chris in the class, man, because that's good, because I respect Chris a lot. He's definitely a sharp trader. And so it's going to be awesome. And maybe Josh will pop by too, as long as you wear a hat. You got to wear a hat, Josh.
Always. I want a Yoo-hoo hat like you have.
Yeah. All right. Well, I gotta blast out. I gotta lock down the computer, and my parents are coming. My mom's coming tomorrow, and so I'm gonna get ready for her and stuff. So.
Hey, thanks for swinging by, Alfonso. I really appreciate it. If you guys haven't signed up for tonight's session, make sure you get signed up for that. It's going to be amazing. We're going to continue this conversation there. I think no doubt I'll be in this class as well. I actually told the family earlier, we have some things that we do as a family in the morning. And I was like, no, it's got to get moved because I need to be able to hit the ground running with the opening morning gaps and rock and roll. So I'm excited for it all.
It's $497. So, I mean, it's that you'll make $497 probably the next day after your first class if you have a live trading account. So, all right, everybody, we'll see you soon. Thanks.
See you guys. Have a great day. We'll see you next week.
Thanks, everybody. See you.